The shock results of the French election have grabbed headlines. That after the country's far-right politicians scored record gains in the European Parliament vote a week ago. Their surprise showing in the elections wiped off $258 billion from the French stock market as investors got spooked. That has led the European Central Bank to say that they will ensure the smooth functioning of financial markets. ECB Chief Christine Lagarde says she's still focused on bringing inflation down to 2% around the region, despite worries over the far right taking power in France. French President Emmanuel Macron called for the snap election a little under 2 weeks after his party's candidates lost to far-right politicians. Okay, that leads us to talk about where everything is going from an economic standpoint to a political standpoint. And joining us to talk about that, we have William Lee, Chief Economist at the Milken Institute. William, always a pleasure. Thank you so much.
Great to be here, Sean.
Let's talk about this. France snap elections, the effect, uncertainty clearly rattled the markets. Why did Macron do this? And is this a temporary effect, or do you think that right now so much of the EU, and especially France, is concerned about where that country is going?
We are seeing a secular shift in all through Europe, but particularly in France, where Europe, let's put some context here. Europe is well behind the U.S. in terms of GDP growth, per capita GDP income. People there earn about a little more than 3/4 of what U.S. citizens do. And growth there is really stagnating to the point of being below 1%, whereas the U.S. is projected to be well above 2%. So the big difference is that you see in Europe has been there for quite a while. And the French are noticing that because their economy is really not doing as well, and the unemployment rates are starting to climb, and they have issues with immigration, the right is really starting to take hold. And I think that Macron made a Hail Mary pass by having early elections to try to stem the losses that would have taken place if he were to wait any longer.
Yeah, immigration having a huge impact really all around the world. And to talk a bit more broadly, as you mentioned, France is a very powerful economy, the second largest in the Eurozone. And you talked about the state of the Eurozone economy. So what other challenges do you believe that it is facing besides the political fallout from these EU parliamentary elections?
The key is income. The key is unemployment. The lowest unemployment rate we have is in Germany, which is about 3%, but we have in the southern cone well above 7% and 6% unemployment in Italy and in Spain. France is somewhere in the middle, and France lags behind because its technology has really lagged behind. The productivity of the French worker is well below that of the German worker and the U.S. worker. So I think what Macron is trying to do here is to try to position himself so that he can start to make deals with more advanced companies around the world, including China. And part of this, the opening salvo, as it were, are these high tariffs on Chinese electric vehicles. But I think for Germany, they really mean it. They really want to keep out the Chinese electric technology because they really have a commitment to internal combustion engines. The French, on the other hand, say, hey, we're willing to negotiate if you can bring us better technology so that we, the French, can leapfrog the Germans in producing electric vehicles for Europe.
Okay, William, let's talk about these EU Parliament elections, now the new composition, its economic policies. We heard in a very thoughtful story we had on just a moment ago, I hope you had a chance to hear it, that the environment is certainly a huge issue for many people in the EU. They want cheap, efficient, well-built electric vehicles. And you talked about the high tariffs that now China is facing, trying to get its vehicles into that market. So what's going to happen? What is the future? Where is this investment going to come from?
I think the strategy now is where the French are positioning themselves. By first putting up the barriers, they want to bring China to the table and say, let's talk. And while the Germans are going to be resistant about Chinese investments in producing electric vehicles in their country because they themselves want to develop the technology, the French are much more conducive toward having Chinese investments come into France and build electric vehicle plants in France, because the alternative is that the Chinese are going to build in Eastern Europe where labor is even cheaper. And so I think the French are trying to position themselves between the very attractive low-cost places like Eastern Europe and the more expensive places like Germany.
Yeah, but China has all this technology and all this brain power behind building these for eons. I guess that's a discussion for a different time. But last week, the European Central Bank cut interest rates for the first time since 2019. So any further cuts likely in the near term? Is it going to breathe any life into a stagnant economy in that region?
Madame Lagarde, I think, is convinced that the trajectory for European inflation is well on its way toward its 2% target. In fact, the Europeans have a target of 2% and below, right? They want 2% to be the cap for inflation. And I think the Madame Lagarde in the last round has said we are now convinced that we can start to ease up on policy and lower interest rates, and that will be a revival for a lot of industry in the euro area, including France and some of the southern cone countries, where they desperately need more stimulus to boost employment.
Yeah, she has made it clear that she's not going to be influenced by politics, that she wants to see the numbers be there. William Lee, always a pleasure. Thanks so much. I look forward to chatting with you again soon.
Thanks for having me, Sean.